Good day, everyone. This is Gsry Ender from ShrewdTrading.com. We're going to look at the bearish wedge or this rising wedge on the S&P 500 one more time. We see these very nice swings that you've been able to play from the short side, on the long side, on the short side, and all the way up to the top here. Now, when we get up to the top, we have this resistance around 1375. And we see that this market failed again right in this area. One interesting thing is we see at this high, we're on the upper Bollinger Band, and when we're reaching this high, we see that we're away from the upper Bollinger Band, so we have a Bollinger Band divergence on this. And if I add stochastics to this chart, we also see the high that we have in stochastics in the lower high. And in market check, our market check feature, I was talking about the potential for this lower high building. As this was moving up, we were watching stochastics lagging well behind here, and then we end up with a lower high as we expected would happen. I had also talked about the fact that oftentimes when we break out of a rising wedge or a bearish wedge like this, the market moves up, price moves up, doesn't get all the way to the top. Oftentimes it'll fail right at about the middle of the bearish wedge, and we end up breaking down out of this. We do see on these last 2 days it rejected the lower price a little bit. Right now there are two possibilities. The first possibility is we come down to about this 1310 area. That's been a very good support area several times in the past. As we see over on the left side of the chart, we see the lower Bollinger Band at about 1318 right now. If we get down to this level, I would expect the market to bounce a bit from there, and I will not be surprised if it bounces up, it makes a lower high, and then breaks down through that level. The other alternative is maybe the market wants to come back up, touch the bottom of this bearish rising wedge one more time. It could go as high as 1350. It could even go all the way back up to this 1360 level, which has been a support and resistance area as well. And at that point we make a lower high compared to this prior high, and then we come down to the 1310 area. And I still expect some type of a bounce as we get to this 1310 area. Obviously, the other alternative would be it gets back into the bearish wedge and tries to make its way up to the top of that, and I think that's the least likely scenario. The STM, or the Shrewd Trading model on the S&P 500, is still in the neutral mode right now. We see that we've been consolidating for a while, and the odds are pretty good that this wants to break one way or the other. It appears the break is going to be the downside as we've been watching this bearish rising wedge. If you want more in-depth analysis of the S&P 500 and many other markets, you can join Market Check on ShrewdTrading.com, which also enables you to be part of the Shrewd Shout Box. The whole goal of Market Check and ShrewdTrading.com is to keep you on the right side of the trade. This is Gsry Ender, Shrewd Trading.